Today I'm going to explain to you what liquidity means and how to use liquidity to make money trading. Let's get right into it. Liquidity in its most basic form means how easy it is to buy or sell something. You'll often hear people ask, how liquid are you? This means how much liquid money, how much money do you have available right now? When we're talking about stocks and when we're talking about trading, this means how easy is it to buy or sell the asset that we're looking at. So for example, if there's no liquidity, it will be very hard to buy or sell this asset because there's no volume and there's nobody trading. Knowing this, we can use this information to look for areas on the chart that have more liquidity so we can find areas where price is likely to have a large move. Also, just so you all know, this PDF I'm showing you is directly from my premium courses, so I'm giving you all a little sneak peek of what's going on inside of the premium community. This is part of a lesson that goes into my full strategy. This PDF is much longer, but I'm just showing you the part that talks about liquidity. Now let's talk about large banks and large players in the market and why they're so important. When banks are trading, they are moving a lot of volume early in the day. Banks are not trying to day trade. They're trying to place big orders to get good prices on their long-term orders. Banks are not opening up TradingView and buying and selling. But what banks are doing is they are looking at the price of the asset and they're trying to find the best possible spots to enter and exit the market. If you ever see price bounce off of a level and have a huge reaction, it's very likely that a bank or a large institution had an order placed around this level. Liquidity pools, or areas of liquidity. These are areas where there's a lot of buy and sell orders already waiting, so when price reaches these areas, it has a very large reaction. The banks like to trade around areas that there's a lot of volume because they want to trade without affecting the price of the stock too much. For example, if a bank is placing an order for a value of $25 million, this bank wants to get its order in all at once. It doesn't want to have one order here, one order here, one order here, which could happen if there's not a lot of liquidity. They prefer to get their order in all at once so it's less costly and it's more effective and efficient for them. Now let's look at a quick example on the charts. The main areas I look for when I'm finding liquidity are highs, lows, and open of the New York, London, and Asia trading session. So now let's take a look at how price interacts with an area of liquidity. Right here you can see that we have a London high. This is the highest point that price reached during the London trading session. What this also means is that anybody who bought at this high is now at a loss when the price comes down here, and anybody who shorted at this high is now at a win when the price is down here. Remember, every single area on the chart is an area that people are placing trades around. Our job as traders is to find these areas. You can see right here that price moves up past this area of liquidity and then it rejects literally to the exact cent off of this London high. What likely happened here is that a lot of people were getting out of their shorts. So some people were in shorts and they didn't really like the shorts because they saw that price was coming up. So they got out, right, having to buy back their position, forcing price to come back up. But you can see right here that shorts actually did play out. So this means that the sellers were stronger than the buyers and there was more people who were shorting than people who were buying. This caused the price to move down. As a trader, you could have looked at this and said, okay, when price reaches this area right here, I'm going to short. I'm going to have my stop loss at about 6 points, and I'm targeting a 1-to-3 risk to reward ratio. What you also could have done is you could have targeted the next area of liquidity as your take profit. So that would look like this. You'd mark out this Asian low right here. Remember, this Asian low is from a while back. I'm just giving you an example, and I'm acting like I'm actively trading during this day. So you could have said to yourself, okay, I'm going to take some shorts right here when we touch this London high because I'm expecting price to reject, and I'm going to target the next area of liquidity, which happened to be an Asian session low. This would have given you a great trade with a 1-to-4 risk to reward ratio. Now let's talk about some benefits to understanding liquidity and some problems that you're running into if you don't understand liquidity. The biggest benefit of understanding liquidity is finding great entry and exit points for your trades. I just showed you an incredible example of this a moment ago with the trade that we were looking at on TradingView. You can see how when you use liquidity and when you understand liquidity, you can find very accurate points to enter and to exit trades. The second most important part about understanding liquidity is that you're following the big players. We're going to go into trends and the importance of trends in one moment, but the main thing that you need to understand is when you're trading, you want to be taking the same trades or at least similar trades that these large players are taking. If you are trying to trade against these big players, you will lose. Another benefit of understanding liquidity is that you're avoiding price slippage when you're trading around these areas. When we're looking at areas of liquidity, there's often a lot of volume around these areas, which usually means we're going to get a good fill on our order. When you're watching me on an Instagram video and you hear order filled, that's because I'm trading around areas of liquidity, so my order always gets filled instantly. Now let's talk about some bad things that can happen if you don't understand liquidity, and this is happening to a lot of you, so pay attention. If you don't understand liquidity, you are literally just looking at your chart and guessing on which areas are important. This is not how to trade. If you don't understand liquidity, you are literally just looking at your chart and guessing on which areas are important. The other thing is that you're going to miss out on a lot of these big moves. If you don't understand liquidity, you won't be able to identify these areas, and there could be a really good trade opportunity that you could literally not see. You'd be blind to it because you don't understand the underlying dynamics behind liquidity and why the market's moving the way it is. Also, if you're trading around areas that have no volume or really low liquidity, you could get a really bad fill on your order, leading to a really bad price for your trade. Now let's talk a little bit about liquidity grabs or sweeps. A liquidity grab is very simple. A liquidity grab is when price moves up towards an area of liquidity and then moves back down, or it could move down and then move back up. But the main point is that it comes into an area of liquidity and then moves back down or up in the direction that it was. Let's look at a quick example. Right here, you can see that we have a New York high. Price comes up, grabs this liquidity, and then moves right back down. The example we talked about earlier today was also a clear example of a liquidity grab, right? So price moves back up, grabs liquidity, and then moves back down. So we just had something really cool happen. So it's currently 11 a.m. and a lot of our premium members are actively trading, and they just made a great trade following my futures game plan. So I'm going to show you that right now. Right here, you can see my man Yash caught about 10 points. My man I Rack Up made $312 off that trade. David G made $1,000. So this was all today. You can see that I said if we close below 5,630.50, I will be looking for some shorts on our way down to 5,611.50. And this literally just happened perfectly. I cannot fake this. This is all live, real time. You can see it happening. And this just shows how accurate it is, guys. I was just talking about it, and now I'm showing you actively how it works and how we're making money with it right now. If you want to join the community so you can make money with us, you can join using the link in the description of this video. The great thing about Premium is we have a ton of educational resources so you can learn how to trade, and we have signals and analysis so you can learn how to trade and follow our signals and make some money while you're learning. Now let's talk about trends. Trends are extremely important because they show us the direction that the market is moving. There are two types of trends. The first type of trend is a downtrend. Here's an example of a downtrend. You can see that price is making a high, and then it makes a lower low, and then it makes a lower high, lower low, lower high, lower low, and then we just continue moving down. So a downtrend is classified by lower lows and lower highs. An uptrend is the exact opposite. You're looking for higher lows and higher highs. Right here, you can see that we have a beautiful example of an uptrend. We have a low, then we have a higher low, higher high, higher low, higher high, higher low, higher high, and then so on. As a trader, it's extremely important to be aware of what trend you're currently in so that you can make the best possible decisions. I like to say that the trend is your friend. A lot of people try to trade trend reversals. I've never had any luck doing that. Mainly, my success has come from trading with the trend, right? So I like to trade with the trend. So if we're in an uptrend, I like to take longs. If we're in a downtrend, I like to take shorts. I want to show you guys an incredible story of somebody who was able to use my strategy and do something that I've only seen happen a few times in my life. So this is one of my lifetime premium members. Lifetime members have direct access to me so they can reach out to me whenever they need help or if they just want to chat about something. He reached out to me because he was having some trouble with placing trades. All of his levels were right, but he didn't really have the confidence to enter trades. I gave him a few tips and I sent him over some information that helped him a lot, and he was able to turn $300 into $10,000 in 2 weeks. And if you don't believe me, here are his broker statements from every single trade that he took from the beginning of this challenge. Right? So you can see it's a whole video we can watch. We can literally see every single trade that he has taken. Right, guys? So this is the power of being surrounded by good information. People often ask me, how much money do you need to trade? Yes, you need money to trade, but it's more about the quality of your information. If you're able to find great setups, you can turn a little bit of money into a lot of money. And he shared his story, which is an awesome story, right? He's working super hard, he's striving towards financial freedom, and he's really just dialing in and just really getting to the point where he's making great trades every single day. And when you practice, when you learn, and you have great information, this is the result. If you'd like to join the premium community, you can join using the link in the description of this video. Thank you all for watching, and I'll see you all soon. Peace out.